We are all very honoured. There I can see many board directors of the CPS here tonight. All of us at the CPS are very honoured indeed to throw this party for Iain Martin. Iain, well, let me start with this. Iain has achieved a position as a journalist, which I think is really quite rare, even amongst the distinguished journalists in the room, which is that it really is true that people from number 10 to around the departments in Whitehall or the boardrooms of England do say, what did Iain Martin write? So this is a wonderful achievement, and I think very rare. Iain is also going to, I'm very pleased to announce that Iain is going to work with the CPS on a wonderful project, not that marvellous project, another equally wonderful project next year, which I hope is going to revolutionise the think tank world on the global stage. So we're delighted that's going to happen. So far as this book is concerned, Iain has very kindly said that he'll take a few questions on the book. He's going to speak for a few minutes and tell you about it. I'll just tell you about it, that this is the situation. If you want to understand about all this crisis, there must have been thousands of TV programmes, movie hours, books, newspaper articles, thousands upon thousands. But if you really want to get to the bottom of RBS, Fred Goodwin and this calamity which struck this bank, then what Iain exposes in a way which I think hasn't been exposed before is the ignorance of what was happening in this bank, even to the people who were running it. In other words, not necessarily that they were evil, greedy, or whatever other horrible adjectives that sometimes bankers are described, but they certainly were, and Iain exposes their ignorance. I had the pleasure of meeting Eddie George before he retired as Governor of the Bank of England, marvellous man, and he said that as he was leaving the Bank of England, those terms, CDO, CDI, SPV, he'd heard these acronyms, but he didn't understand what they meant. What this book shows you is that even the people who were in charge of the big banks like RBS, who were buying and trading these instruments by computer, did not understand what they really meant. And so this is a tremendous contribution to our understanding of what went wrong, and hopefully will save us from another calamity of the kind that we're still suffering from. So, Iain, would you say a few words, and then we'll take a few questions.
Well, thank you very much. Thank you for those very generous, very kind introductory remarks. And thank you very much to the CPS for organising this evening. Now, I'm not a financial journalist, so I'm not going to talk about CDOs and CDSs. I'm not going to talk in all these technical terms. Some of you in the room here have a much better understanding of the practicalities of working in that world than I do. As a writer, I had to try and get to a position where I understood what it was about. But I've spent most of my career in newspapers writing about politics and politicians, and most of my career around other journalists, which means I've witnessed my fair share of chicanery and extraordinary behaviour, particularly on the journalistic front, and some occasionally political. But even that hadn't really prepared me for writing a book about Fred Goodwin, RBS, and the financial crisis. At root, I'm merely a taxpayer who got very interested in what went wrong, and I think it's worth remembering, and sometimes QE and the various other experiments that have followed the crisis lead us to forget. It's worth remembering just the scale of what happened, and we shouldn't lose sight of how big, how enormous a calamity it really was. The economic impact of the crisis and the slump was devastating. It's the biggest economic reverse peak to trough since the Second World War. It's taken a period almost as long as the Second World War just to get back to a position where we've got the beginnings of a proper recovery. Living standards for millions of people have plummeted, still not recovered. And in terms of its impact on the government's finances, I think you've got to see it in terms of it being equivalent to a decent-sized war of national survival. So we went into this horrific event with a total stock of national debt that was not yet, by that point, 400 billion. by the time we get to 2017, 2018, it will have exceeded 1.4 trillion. So we will have added £1 trillion of debt to the pile. Compare that to the cost of the Iraq War, the monetary cost of the UK, £10 billion. That's the scale of what we're talking about. Incidentally, the origins of the national debt are actually in this book, in chapter 2, because of course the Bank of England was founded by a guy called, one of the founders was William Paterson, financier from Dumfries, who had this rather ingenious idea. He and some of his colleagues decided that the government obviously needed to borrow to fund war on the continent, so the Bank of England was established. But that's not all that Paterson did. Paterson also, at the same time, was a great enthusiast and the principal proponent of something called the Darien Scheme, very famous in Scotland, almost unknown in England. And this was the mad scheme in which Scotland was going to colonise Panama.
Sorry, when was it?
1690s. So in the 1690s, Scotland was going to bridge the gap between the Pacific and the Atlantic Ocean. And a huge sum was raised, an expedition was sent, and this was going to lead to the enormous expansion of the Scottish economy. Everyone was going to get very rich. Is this sounding familiar to any Royal Bank of Scotland shareholders? Well, unfortunately, there was a catch that Paterson hadn't really thought of. There were a lot of mosquitoes in Darien. Many of the settlers died, and Scotland lost about as much as a quarter of its cash wealth. The Act of Union follows shortly afterwards, and in the Act of Union there is compensation for those who lost their money as a result of Paterson's scheme. It's called the Equivalent Society. Paterson is a director of it. And after a while, when the money's flowing through it and they're compensating people, they decide that it might be a good idea to issue some loans. But they need a royal charter for that, so they go to the king and they persuade him. And in 1727, they start a bank, and it's called the Royal Bank of Scotland.
Oh.
So there's this strong thread running through the whole thing, the Bank of England, the Act of Union, and the establishment of the Royal Bank, all that and much more in the book. But back up to date, after the crash 5 years ago, I became fascinated, obsessed with what had happened in RBS under Fred Goodwin. And it struck me quite simply, as a journalist, as one of the most fascinating human stories of our time. I was determined to try and find out what drove him and his colleagues. Now they made, it's often forgotten, they managed to make RBS into the biggest bank in the world, briefly. Had the biggest balance sheet at precisely the wrong moment. The rescue, the reason I focused on RBS particularly, is that the rescue dwarfed the rescues of the other banks. 45.2 billion to buy the 81 point something percent of RBS that we own. So it was huge. But the more I looked into it, the more convinced I became that the explanations that I heard as a taxpayer, as a consumer, were partial or just inadequate. And it suited, in a classic British establishment way, it suited quite a lot of people to say that this was all about one guy or a handful of people, Fred Goodwin, and that if he could be demonised, where he made enormous mistakes, all detailed in this book, all blame could be apportioned to him. But the blame was obviously much more widespread than that. It extends to the regulators, the auditors, the politicians who declared that that we were living through the end of boom and bust in this extraordinary period of perpetual growth, which was going to carry on forever. And in those circumstances, it was fine for a bank to carry on getting bigger and bigger and bigger, because it was never going to end, and it did. So I went and interviewed the key players, interviewed more than 100 witnesses, and spent a couple of years effectively getting people to open up and tell the inside story. And the book is out as of last week to coincide with the 5th anniversary of the crisis. So, in essence, RBS should be understood as a bank that grew too fast and lent too much money. It went from being a modest Scottish bank at the end of the 1990s, had a very proud history, and it almost personified that reputation of sound, solid, canny banking that the Scots had built up since the 1720s. And, I mean, you should also understand about Goodwin. demonised as the world's worst ever banker, not actually a banker, an accountant. So he only goes into banking after having been a rising star at Touche Ross and Deloitte in 1995. 5 years later, he's the CEO of what becomes the world's biggest bank. And his colleagues tell in the book of how little interest he shows in the basic components, the old-fashioned basic components of banking, credit, risk, liquidity, capital. Instead, he's focused on building a monument, building something big. It even shortened its name to RBS. It had never been called RBS before. It was always called the Royal Bank of Scotland. But RBS would allow it to compete with BP, to be seen alongside GE. It was a big, global, massive company. So the whole tragic story is there in full technicolor detail in the book. But what broader lessons do I draw from it? Now, I just want to leave you with a few thoughts, and I'd be fascinated to hear your views afterwards. If you have a few questions, or if you want to call me afterwards, feel free. First, I think this story cannot be understood, what happened to us, what happened to the British economy, without reference to what happened to British banking from the 1980s, and without understanding the extent to which it exploded, and the extent of the consolidation and extraordinary growth. In essence, the crisis caused a disproportionate amount of damage in the UK because we had allowed, or we had enabled, our banks to become so much larger than the rest of the economy. Now, here's what happened, and there's a fantastic graph in the book put together by Richard Davis, formerly of the Bank of England, and now at The Economist. So, Bank of England numbers. Here's what happened. In 1960, you've got 16 clearing banks. It's a lot. There are only 5 now. And they've got combined balance sheets, total assets, of around 8 billion. Now that's a sum equivalent to about 32% of GDP. Banking then grows, changes, evolves. Lots of people didn't have bank accounts, they opened bank accounts, banks start to expand, you get the big bang, all sorts of contributory factors. By 1990, by the time Thatcher leaves office, the combined bank balance sheets are 428 billion, 75% of GDP. So in 2000, it's 1.4 trillion. That's, by that point, it's 143% of GDP. Now, here comes Gordon Brown and the end of boom and bust. By the time of the crisis, measured just shortly after it, the combined UK bank balance sheets of the 5 clearing banks, essentially the figure is 6.24 trillion pounds. That's 450% of GDP. So when a bank or several banks blow up, it's obviously going to be ruinously expensive to rescue and extremely costly in terms of the aftermath. Next lesson I would draw, I think some organisations may just be too big to manage. Even JP Morgan ends up, which was very smug about surviving the crisis and doing so well through the crisis, even that ends up getting swallowed in the end by the London whale crisis. Mega banks may actually just be simply too big to be efficient. There's a lot of quite interesting research being done by the Bank of England and American academics about essentially what we see as efficiencies of scale may rest largely on the assumption, those operating in the markets, that we're all there to pick up the tab. Now, finally, I think the biggest lesson is about the constant need for healthy conservative scepticism. I think when it comes to running a firm or running a country's economy, it makes sense to leave sufficient space for insurgent people to say, actually, this doesn't feel right. Are we sure about this? There's groupthink here. We have to be careful and responsible as well as creative and just following the herd. Mankind is, as we know, wonderfully inventive and innovative. But we're also, as history suggests, prone to manias, periods of madness and hubris, and RBS is that story once again. And if that happens, if we make the oldest mistake, which is presuming that we're so much more sophisticated than our predecessors simply because we're here now and we're brilliant, and we forget that actually they and their experiences have a lot to teach us, that's when we get into serious trouble. So if you have any questions, I think Morris is going to host. I know you're keen to have a drink and.
So let's. Ian, thank you very much indeed. Will you do a few questions?
Yes, absolutely, delighted.
Right, so let's start over there and then we'll come over here.
Ian, I haven't read your book yet, but I'm an ex-banker and actually at Barclays, and you might well look at, say, if it wasn't for RBS, it could have been Barclays.
Yeah.
So point number one is I'd be interested in your book that was Lehman actually just a victim of circumstances and RBS, or was it because of them? Is question one. Question two is making it happen. In the political world, government is very, very big, impossible to manage. Are there lessons actually that politicians could take from the banking crisis in the running of what we call government today?
Very good question. In terms of Barclays, I mean, it's detailed, chapter 12, this extraordinary battle between Varley and Goodwin. I mean, it really is it's the most extraordinary, I'm looking for a phrase other than willy-waving contest, the old British phrase, and it's essentially that. It is two corporate giants determined, absolutely determined, to beat the other, and Goodwin has to be bigger than Barclays, and on that basis they both pursue ABN AMRO, the Dutch bank, and it's completely crazy to think now, at a point when the credit crisis has already started. So the deal is only closed in October 2007, and there's still Barclays withdraws just before that. They're still racing to try and get this. To win this deal, completely crazy. That has the impact in terms of RBS of doubling its size, just as the crisis is getting underway. In terms of Barclays, I'd simply say that Barclays was very, 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 very lucky that it lost. In terms of lessons for government, well, I think the biggest lesson is the philosophical one I referred to at the end, and it relates to Gordon Brown and the end of boom and bust. It's just not feasible to end boom and bust. There's a human cycle to these things. You need to be innately cautious and sensible and realise that there is the time flows in and the time flows out. So I think it's on that basis. I have to say I do see some concerns about what the current government is doing in terms of boosting the housing market. And giving away lots of freebies and free lunches that we'll all be paying for 20 years of school children. So I do see some dangers there.
For the benefit of the gathering, I think it would help if anyone had a question would say your name and if you represent any organisation, what it is. So I'm coming here. Sorry. Well, there's several questions in this area which we can take now.
I'm called Robert Iggulden. I did start a small bank called Dunbar & Co. And my question is, since I started following RBS about 40 years ago, they had a reciprocal shareholding with Santander. Santander have underwritten every rights issue, NatWest particularly, and they were the principal beneficiaries hugely in the ABN AMRO acquisition. I have a feeling they are the eminence grise behind RBS. Is there any evidence of that?
Well, there's an extraordinarily close relationship between Emilio Bertin and George Mathewson. Should explain that George Mathewson, it's not all Fred Goodwin's fault. I mean, Goodwin is following on from the man who rescued RBS, Mathewson, and first had the vision to try and turn it into the biggest bank, very close to Emilio Bertin, who sat on the RBS board and is actually quoted when they're doing the NatWest deal. He's getting annoyed at how long the meeting is going on, and he really desperately needs a cigarette, and he starts shouting, "You must do this deal, I will give you the money," which he then, as you say, does. And then plays Fred Goodwin like a fiddle, and makes a huge profit out of ABN AMRO. He essentially sells, within 6 weeks, he sold his part of the ABN AMRO consortium for a massive profit, leaving RBS with the junk. So RBS, to put it in context, RBS didn't pay the whole amount. It wasn't all the 70 billion euros wasn't paid by RBS. RBS pays a third of the bill and ends up with 70% of the assets. So they basically got all the investment bank rubbish. So yes, while being a great friend of Mathewson's and RBS, you could say he stitched them up.
Let's do, I'm coming around here, we're going to go around in order. There you go, Michael.
Michael Cockrell, BBC. I'm just interested journalistically, Fred Goodwin, I Did you manage to talk to him? How difficult was it to try and talk to him?
I didn't talk. I made probably, I think, about 10 efforts via very good friends of him who've cooperated with the book. He just decided to shut out the world, become kind of Greta Garbo of the financial crisis. But actually, I think that's one of the ways in which I think that's a terrible mistake. He's made it very easy for people to demonise him. He didn't respond, and that's tied up in his personality, his problems with admitting weakness and failure. But I think if he had responded differently afterwards and given a proper account of what happened, I don't think he would have presented as convenient a target for the politicians who, having knighted him, wanted to strip him of honours, etc. But all the responses I got were that he just, as he put it, which is rather interesting psychologically, why would I be interested in a book? I don't read books. To which one of his friends said, well, that's the thing about reputation, other people do.
David.
David Davis. Two questions, really. You sort of intimate this starts back in the Big Bang.
Yeah.
Are you now a fan of Glass-Steagall, having said that? And are there any heroes in this story?
There are a couple, not many actually, but there are. I mean, that's the extraordinary thing. When you interview that many senior bankers who were at the scene of the disaster, how few of them really seem to accept blame. They can account for what they did. It was always someone else's fault. There are a couple of people. There's a guy who spends 6 weeks at RBS in the US and says this CDO stuff is a disaster, you value this too high, you need to reduce the marks, and he resigns. So he's one of the only people in the entire story that says, I can't sign up to this is wrong, and leaves. So he's one hero, and there are a couple of people around Goodwin who are opposed, for example, to the ABN AMRO deal, and they're immediately frozen out. Interesting on Big Bang. I mean, one of the things by the end, I was determined to do. The afterword is essentially an essay on, and the rest of it is a hopefully entertaining, informative narrative. The afterword is an essay about what I think it meant, root causes, etc. I think those of us who are on the centre right, I don't think you can do the reverse of the Gordon Brown view, which is this has nothing to do with me. I don't think you can say Big Bang is completely irrelevant to it. It's all Gordon Brown's fault. Everything was fine until then. It's clearly not the case. There's no doubt that what happens in 85, 86, 87 unleashes in London spirit of expansion, aggressive takeover, does many good things, many positive things, but there's absolutely no doubt that then is a factor in our... I know the Big Bang is not strictly about banks, completely understand the distinction, but it then creates the mania for bigness, scale, takeover, which follows. I don't think it works for those on the right to say that that's irrelevant. I think we've got to think it through. And I think the lesson is now about scale, is about bigness, and that actually you can't, having unleashed some of this spirit, you end up with institutions which are simply too big and they're too close to government, and you end up with corporatism, and it's not free market.
Cyril Taylor, I helped set up the First Republic Bank in the States. And I want to ask you, do you think the government has taken sufficient steps to stop some of the scandals that caused the financial breakdown? In the United States, some of the banks were going into poor areas, not asking for a deposit, actually giving people the cash and a low rate of interest, and then of course that failed. And then derivatives, the packaging and repackaging of mortgages, interest rate swaps. These are scandalous techniques. Has the government stopped these sort of things going on?
No, I think the efforts at rescue and reform have been patchy at best. Not easy for politicians involved. I mean, the British banking system is still about 350, 360% of GDP, so it's enormous. How do you slim it down to something smaller and safer without doing huge damage to the rest of the economy? It's incredibly difficult wrestling with it. I think what happens though in banks from the 80s onwards is that the reason that those scandals happen, I don't think it's just straightforward greed or avarice. That's obviously in there in terms of some people's motivation. There's a shift, which is that previously people, they didn't love their banks, but they broadly respected them and thought, well, actually they're not going to sell me something I don't need. Broadly have my interests at heart. Occasionally they let me down, but what happens is that as the banks are reformed, huge computer power allows them to centralise, create sales forces, reform the branches. A lot of it necessary, because British banking was a mess in the early 1980s. So a lot of the reform is necessary, but it unleashes this spirit in which the banks start to see themselves as being just the financial equivalent of supermarkets. Isn't a bank just like a supermarket? Can't you just sell anything? And even just proving the points, you can hire Andy Hornby from Harvard Business School from a supermarket to run a bank. What could possibly go wrong? But actually we discover that too late, that banks are a conduit for the money supply, essential to the working of the economy, and that if they're badly run, we're all in trouble. So I think it was a mindset, it was a shift in mindset that people thought, well, actually just invent products, make up products that people don't need, then market them and sell them to them. Well,
Should we do two last questions? I saw a hand here and I saw a hand here. Let's go with that.
Yeah, I'm Mark Austin. I'm on the board of an international bank and chairman of an insurance company after a long career in PricewaterhouseCoopers. So, my question is, how, obviously I haven't read your book, how kindly are you looking on the regulators?
It's not kindly at all. I mean, the key regulator, I suppose, would be John Tyner, who you could argue that John Tyner, who ran the FSA, did ensure that the insurance industry didn't blow up in the UK in the crisis. So it's not completely black and white, but it's a catastrophic failure of regulation. It's a political accident which happens shortly after the 1997 election. Brown thinks, I don't like the city, I don't like the old school tie, I need a big, modern, new regulator. It turns into a very messy fight with the Bank of England and Eddie George. And essentially what gets lost is the idea of financial stability. That it's still technically the Bank of England's responsibility, but ultimately nobody really feels it's their responsibility. Government, FSA, bank, to put up their hand and say, banks are too big, do we understand these new products? How concerned should we be about the massive expansion of credit? It's just, it's no one's responsibility, so no one checks it. And then you have this extraordinary political environment in which even the Tories are cowed as well, and lots of people think that Gordon Brown has won. That economics is a settled argument. All you have to do is share the proceeds of growth.
Not everyone.
Not everyone, but large numbers. It becomes a political consensus, and everyone predicates their decisions, the regulator included, on it just being impossible that this would blow up. But the regulator doesn't come out of it very well. In particular, in terms of it's the last line of defence in terms of RBS on ABN AMRO. That crucial discussion where they could actually have said this involves running RBS's capital below 4%. That's obviously mad. We're going into a financial emergency. They allow that to happen. RBS gets ABN AMRO. Disaster.
Is there a penultimate? Did I see a penultimate hand? Yes. So let's take the penultimate question. I'm going to ask the last question.
Thank you. Alex Singleton, formerly a member of Iain Martin's team at The Telegraph. I have a question about competition. Lloyds has recently split into two, although they're still owned by the same group. And the TSB adverts all say, welcome to local banking, which I think is a total lie, because it doesn't seem to be any difference from what existed 2 weeks ago. How is it that we've got to the situation where actually all banks are identical? In the US, there are hundreds of banks. In the UK, there are a very small number. The EU has, in theory, attempted to create some competition. Metro Bank has attempted. But actually, competition doesn't really exist in any bigger way than it existed at the start of the crisis. And why is that, and how do we get to a better situation?
Just on American banks, just to put it in context, the American banking system is still, the Americans get worried when it gets close to 100%. I think it's just around 100% of percentage of GDP. Their banking system's not perfect, but it's smaller. I think it's a really good question. I think it's caught up in a coalition, this business of lack of competition. Lots of people have made speeches saying there should be more competition in banking. Essentially, something goes catastrophically wrong with that co-op deal. I won't bore everyone with the details, but something goes catastrophically wrong. That's Vince's baby. They're going to give. They determined that that's going to go to the co-op. These extra branches. That way you boost mutuals, who are obviously marvellous, who never get into trouble, and you create a competitor. That then means that the other private sector attempt to buy those branches fails in quite interesting, murky circumstances. So I think they just banked everything on the co-op thing working, and they're now very embarrassed about it, and it's all very messy. But the end result is precisely as you say, that after 5 years of alleged reform, don't have any more competition in UK banking than we had 5 years ago.
So I'm now going to exercise my prerogative, which is to ask the final question, which is, when you were talking about the disparity in size between the large banks and the UK economy, 6 times more, you were saying? So doesn't that have an alarming consequence for conversations that take place about the agonising subject of Europe and European integration? Doesn't it mean that, doesn't it absolutely force the conclusion that such corporations are beyond the reach of national governments, and that therefore it's essential that there is European integration, preferably global integration, but at least European integration, in order to regulate companies which are bigger than countries?
No, I think it's a very good question. I think it means the opposite. I think it means that if you want an economy that's safe and that's not going to blow up in the form that it did 5 years ago, you need a strong, robust, smaller but robust nation state and national regulation. I know there's a great Bob Diamond and various other people have spoken this week saying we need global super regulation and we need no regulatory arbitrage between countries, blah blah blah, which all leads to eventually world government or world financial.
It does.
I take a different view. I just think you need something. I think you need a system that's manageable, that has lots of competition, and which is regulated in Britain.
Would you all agree with me that what you've got here is a living testament to the magnificence of investigative journalism? This is you've not only got a marvellous book, you've also got a highly articulate explanation of what's been happening, and I'm sure
a bond salesman.
Everyone here.
Read the dedication.
Everyone here is very impressed and very grateful. And to show your gratitude, you see this little. There's a little till here. Here are the books, and our guest of honour will, I think, be prepared.
Of course, yes. Well, thank you very much for coming.
Will you sign some
Absolutely,
books?
of course. Yeah.
Wonderful. Thank you very much.